Impact of President Trump's tariffs on the U.S. economy and stock market. The effects of President Donald Trump's newly imposed tariffs are beginning to be felt across the global economy. Trump, who recently assumed office for his second term, had stated that these tariffs were meant to restore the American economy to its former strength. However, as both Canada, Mexico, and China retaliate with their own trade measures, and as higher import
100 points, the NASDAQ coming off its worst day since 2022, bouncing back somewhat, up just about 0.5%, but that certainly isn't easing the concerns about the stock market.
$2 trillion. That's how much U.S. stocks lost in yesterday's trade. It was their worst drop since September.
The U.S. stock market has lost over $4 trillion in value following President Donald Trump's...
Canada's main stock index dropped today, while stock markets in the U.S. had their worst day in years.
The American stock affecting American consumers. The financial markets have taken a hit. Last week, the U.S. stock market was already experiencing a decline, and it continued its downward trend as the new week began. This resulted in a staggering $1.7 trillion loss, the largest in recent years. Investors are now concerned about whether the U.S. economy will recover as President Trump has promised. Stock market turmoil and fears of recession. Concerns about a potential economic recession are growing. The Dow Jones Industrial Average plummeted nearly 900 points, while the S&P 500 dropped by 2.7%, and the NASDAQ composite fell by 4%. The technology sector was hit particularly hard, with Tesla stock falling by a shocking 15% in a single day. Other major tech giants, including Apple, Microsoft, Alphabet, Google, Amazon, Nvidia, and Meta, also suffered losses ranging from 2% to 5%. When asked about the possibility of a recession, President Trump responded vaguely, stating that there's a transition period because his administration is implementing significant economic changes. However, Commerce Secretary Howard Lutnick firmly denied the likelihood of a recession, despite the government's reassurances. Some investors worry that the administration's aggressive trade policies and unpredictable economic decisions could push the country into an economic downturn. Shelby McFadden, an investment analyst at Motley Fool Asset Management, noted that this is the first time a U.S. administration has openly admitted that its policies might cause economic pain before bringing long-term benefits. The job market, which remains stable for now, could also be impacted. Analysts fear that the administration's focus on mass deportations and government spending cuts could lead to an increase in job losses, further weakening consumer confidence. Key reasons behind the stock market decline. Several factors are driving the market downturn. 1. Trade policy uncertainty. The administration's tariffs have triggered uncertainty among businesses and investors, making them hesitant to invest or expand operations. 2. Fears of a recession. Market analysts are increasingly concerned that the tariffs could slow economic growth and lead to a recession. 3. High stock valuations. Many companies' stock prices have been historically high, making them vulnerable to sudden corrections. Technology stocks have taken the hardest hit, with Tesla alone losing over $125 billion in market value in a single day. Airlines have also been affected. Delta Airlines stock fell by 14% after the company cut its profit forecasts, citing economic concerns. Investment strategist Ross Mayfield commented that the Trump administration appears willing to accept a market decline, or even recession, to achieve its broader economic goals. However, the White House maintains that the economy remains strong despite recent market turbulence. Kevin Hassett, chairman of the National Economic Council, reassured investors that tariff uncertainties would soon be resolved and that tax cuts would ultimately stimulate investment and wage growth. What's next for investors? Market watchers are closely monitoring several upcoming developments, including the latest inflation report, which will provide insight into rising consumer prices, the Federal Reserve's interest rate decisions, which could influence borrowing costs, potential government measures to stabilize the economy and restore investor confidence. With markets remaining volatile, investors are being advised to diversify their portfolios to minimize risk. Analysts also warn that prolonged uncertainty could further destabilize corporate profits and economic growth. U.S. trade negotiations and international reactions. As part of its trade policy, the Trump administration is revisiting the United States-Mexico-Canada Agreement, USMCA, a deal that replaced NAFTA in 2020. Commerce Secretary Howard Lutnick and U.S. Trade Representative Jameson Greer have already begun discussions with Canadian and Mexican officials to renegotiate the agreement. While the official reason for these negotiations is to ensure fair trade, insiders suggest that Trump also wants to use tariff threats as leverage to gain further concessions. Canada and Mexico have responded with their own countermeasures. Canada imposed $21 billion in retaliatory tariffs on U.S. products, including food items, appliances, and alcohol. Mexico has proposed raising tariffs on Chinese goods to match U.S. levels in an effort to ease tensions with Washington. Additionally, the European Union has imposed a 50% import duty on American whiskey, motorcycles, and motorboats. In response, Trump has threatened to impose a 200% tariff on European alcohol imports. China's response: an escalating trade war. The U.S.-China trade war has also intensified. After Trump increased tariffs on Chinese goods by 10%, China retaliated with 15% tariffs on U.S. coal and natural gas and 10% tariffs on crude oil, agricultural machinery, and other products. On March 3rd, Trump further escalated tensions by raising tariffs on Chinese goods by another 10%, prompting China to retaliate with new tariffs on American agricultural products like wheat, corn, soybeans, pork, and seafood. Additionally, China has blacklisted 15 American companies, restricting their access to its markets. Trump has also announced that on April 2nd, the U.S. will impose reciprocal tariffs on any country that places tariffs on American products. While this measure is aimed at China, Canada, Mexico, the EU, and India, its actual implementation could take 6 months or more. Final thoughts. The global economic landscape is becoming increasingly unstable due to ongoing tariff disputes. While the Trump administration believes these measures will ultimately strengthen the American economy, the immediate effects have been severe, leading to stock market turmoil, rising costs for consumers, and increased uncertainty for businesses. What do you think about these developments? Share your thoughts in the comment below. And don't forget to subscribe to our channel and turn on notifications to stay updated with the latest news. Thank you for watching.